Hey everybody, what's going on? It is James here with Crypto Common Sense, aka 3 Weeks Trading. And in this video, I'm going to talk about some charts. I'm going to show you guys some software that I've been working on. And I want to lead off by saying that it's really important when you're trading to put your emotions to the side. Everybody knows this, but I see it sometimes in the comments on my videos. When I post something that somebody doesn't like, I can always tell when they're being emotional. In the last video that I posted, I talked about Bitcoin. I laid out what was likely next for Bitcoin. I talked about how this was probably a trap and that it probably was going to bounce. And then I talked about how we need to watch and see whether that bounce tried to head for the top of the range or whether it ended up looking like what's called a last point of supply and moving back down. And guys, it's really important, really stay grounded. We have a problem in the world today, not just in this country, but in the world today, where people, when they believe something and when they agree with somebody, it's like they turn the logic part of their brain off and they just go with it. We see this a lot in politics, and I don't get involved in politics, but we see this in politics where if somebody's ideology lines up with yours, you'll excuse their bad behavior because they believe the same things you do. And I see this in trading where people, who are super bullish on Bitcoin, for example, anytime I say anything that's less than like permable, they automatically are like, oh, they get the pitchforks out. They don't want to listen. So in this video, let's talk about what Bitcoin is doing. Well, the reality is we don't know what it's doing because, again, it's inside of a range. So this is an initial reaction. That's kind of an automatic thing. The market oversold. It went too far too fast. And so it had a reversion, right, back up toward this 50-day moving average. We need to let the market digest what is happening. And then we can look for signs of the next move, whether that's up or down. But keep in mind that right now, some things that you want to, keep on your radar is the 50-day moving average does tend to be a pretty good line in the sand. Obviously, we can see it's not, a hard wall. It does go beyond it, but it tends to be a pretty good line in the sand. And right now, we're kind of right around that area, a little below it. The other thing is the 19-week moving average is a moving average that I've been talking about now for over 7 years, I believe, 6 years, I know. And this 19-week moving average tends to be a very good line in the sand as well, right? And so we are currently back below that, which is a little concerning. The more concerning thing for me on this specific weekly Bitcoin chart is the fact that we are, in a rising wedge type of pattern, which does tend to be a bearish pattern, but caveat. It's more reliable when you're moving down and you get a rising wedge and then it'll often continue. It's less reliable when you're moving up. Oftentimes then it's kind of like a coin flip, all right, like 50-50 which way it goes. That being said, when I look at the volume was dwindling throughout this, which again makes me think distribution. And the big volume pump here was actually, selling volume mostly. So again, that kind of has a bearish impetus to it. And if we look at RSI, which I don't trade RSI most of the time, but when we look at RSI, we can see a long-running bearish divergence. In fact, this is what I called a three little pigs setup. That's a setup that I started coining that phrase back in 2019. Here is the high. Here we have a higher high on price, but a lower high on RSI. Yet another higher high on price, just barely, lower high in RSI. In fact, let's double check that was higher. Yeah, just barely higher, lower high on RSI, and then again, a slightly higher high on price, lower high on RSI. So I call it three little pigs because it's 1, 2, 3 divergences, right? Now, some people would argue and say, well, you got to count this here. And of course, that resets it. Maybe in that case, it had a double bearish divergence. But regardless, there's some bearish divergences there. Also, we had this trend line that was really looking good, right? Came down for a touch here. Nice third touch, aka 3 peaks trading, right? Third touches are powerful. Did get a bounce off of it, but then it came right back down and now it's currently under that trend line. So it's a little concerning there. That weekly chart's not looking too strong. If we look at a 3-day Bitcoin chart, let's take all these labels off because if you don't know what they mean, they're just noisy, right? 3-day chart. What I see here is, again, that same rising wedge pattern. We had this one, it broke south, came back up, and now it's trying to kind of expand a bit. We can even pull this down like this if we wanted to. Really, I look at it more like this. This was an area of supply, flipped to demand, right? Broke through, came down, retested, had it bounce off, and now we're retesting it again. So this is all consolidation after breaking through supply. It's a little bit concerning because if there was a lot of demand there, it really shouldn't hang out there. It should move right off of it. The fact that it's hanging out there makes me think it's weaker than what a lot of retail traders probably believe. And then if we look again back at the daily chart, it's just trapped in that range. It's bound, range bound, so to speak, bounced off the 200-day moving average roughly, tagged at 50, and it's currently just consolidating. So we're in a very much wait and see mode at this point. Again, not to beat a dead horse, but Bitcoin is a beta risk on asset. That means that it moves with the larger markets. It tends to overreact. And so if you're still screaming store of value, realize that the reason that Bitcoin is having a tough time is because the QQQ is also really choppy right now. And so it's just kind of mirroring what the QQQ does. One thing that's a little bit concerning if you're a bull for Bitcoin is this is that market cycle chart that we've now been talking about, or I've been talking about since November 2021 when I posted up the complacency phase. It's really not looking like optimism to me anymore. This is taking way too long, and I've talked about this in previous videos. This looks more like distribution to me, and that's kind of the way that I'm leaning. This did look like a UTAD or an upthrust after distribution. This did look like a last point of supply, and this is trying to break down. So if this breaks down, it could be the start of the markdown phase, which would potentially take this back down toward the bottom of this channel, which would be the first time that we didn't really get a true blow off top in Bitcoin versus the QQQ, right? Every time we've had these blow off tops. So that would be a different pattern than past patterns. So those are my thoughts on Bitcoin. Again, I just wanted to kind of show you guys what I've been up to. I have pivoted and been working on this software for a little while. And I've been working on it actually for about 6 months, just here and there, kind of touch and go. This is called Tradespionage. It's not for sale or anything. It won't be for a while. So I'll have some reports. It'll have some scorecards to kind of grade how you're doing. And again, it's not showing over here yet, but it is going to have some screeners that are based on my proprietary algorithms. So keep an eye out for this. This is going to be coming out in the next few months. Also, I have a software that I'm working on called Quanteki. Quanteki is going to be an automated trading platform that lets you automate trades. These are going to be things that I build myself and support myself. And so that way I know they're done right. And I know that my subscribers are going to be taken care of. So I just want to give you guys a quick look at what's coming in the pipeline. And again, stress the fact that when you're trading, leave emotions out of it, leave your bias out of it. It's okay to have a bias. It's okay to say, hey, I'm bullish long term or whatever, or I'm bearish long term, but make sure you're actually looking at the charts to take directions on which way you should be trading or which way you should be, putting your money, because blind faith has no place in markets. The reality is this: all markets are guaranteed to eventually return to their mean. Always, always, always. So even if you're a huge believer in an asset, if that asset is super far off of its mean, you have to understand that eventually it will return to the mean. That's just how markets work. So don't put yourself in a position where returning to the mean means that you are financially ruined as a result. All that being said, please remember that I am just some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset.